Welcome back to another episode of Freedom Finance with Lanny, guys. And we're nearing all-time highs in the stock market, in the S&P 500. That target was 47.96, set back in January of 2022, almost 2 years ago. We're sitting at just over 47.19. So we're up 23+% so far this year in 2023. Everything seems great, right? Everything seems firing on all cylinders. But the stock market obviously has popped and exploded, especially over the last 45 days. So the question always is should I keep investing? Should I now start investing? Lanny, what are you doing right now with the stock market? Are you investing as the stock market is skyrocketing? Are you trying to buy at the high and it might reach back to the lows? I get these questions all the time, whether it's through friends, coworkers, direct messages on X, emails. So today we're just going to address that. We're going to have a quick conversation, more personal, mano y mano, about what I'm doing right now with my investments, because that's really the question. Because everything else is just news, just noise that you should try to tune out as much as possible. Obviously, stick to your strategy, stick to your investment philosophy. But I want to be open book with what I've been doing and what I plan on doing going forward, guys. So yes, grab that favorite beverage. You guys love it. I got coffee flowing right now, but you might get your beer. And if it's Sunday, grab that wine because you're Italian today, guys. And let's dive into what I am doing right now in the stock market for my investing strategy and what you could be doing. Let's get it. If you guys have ever heard of Ken Fisher, Fisher Investments, a nice billionaire, to talk about, he always had that saying of time in the market beats timing the market. And that's kind of what I've always lived by. So if you're new to investing, if you're a beginner investor, there's going to be highs, there's going to be lows, there's going to be sideways, there's going to be parallel steps, parallel shifts. You're going to have years like 2019, 2020. You're going to have bad years like 2022, 2008, 2000. You're going to have bad years. You're going to have strong, roaring years as well. So I don't try to time the market, and I'm hoping that nobody here is trying to time the market. Not saying you'll lose every time, but I'm not saying you'll win every time. I'm just saying that you won't know what's really going to happen going forward. So we'll kind of use that as the baseline. Time in the market beats timing the market. So even though it's December, 16th today here filming this, stock market's over 4,700, up 23% this year. I do want to rewind back to close to the end of October. The market was at barely over 4,100 at that point in time. And the market in these last, let's call it 45 days or so, has surged just about 15%. So what was I doing during that surge? I was continuing my rinse and repeat, my Vanguard trifecta, you betcha, where I buy $300 of VYM every week, $60 a day of Vanguard's S&P 500 VOO every day, and $40 a day in Vanguard's Dividend Appreciation ETF VIG every single day. I never stopped the investing strategy, the automation to investing on my side. Again, you can check that video out. You can check how I was buying and how I've been buying VOO every day and what that actually looks like. And I even show videos here on the channel by, hey, you could start investing automatically every single day, $5 a day if you want, $5 a week if you want. I have videos to show you how you can do that because that keeps you investing in the market. Again, not timing the market and spending time in the market. So I kept my investing strategy over the last 45 days. Again, that end of October 4,100 price point on the S&P 500, all the way to where we're at now at over 4,700. I was sticking to that strategy. I was also looking for undervalued dividend stocks. Dividend investing is my true and true. So I'm always on the hunt for an undervalued dividend stock. In fact, if you follow me on X, Twitter, what you want to call it, you know that I've been looking at and buying shares of Shell, SHEL, as much as I can, frustratingly. Main Street Capital, ticker symbol MAIN. And I've always had my eyes on Kroger, ticker symbol KR. So I'm always looking still for undervalued stocks, buying when I see the opportunity. Personal preference, for example, I like Shell under 64. I want Kroger under, 43, I believe, per share. Main Street Capital, bring me back down to the low 41s, preferably below 40. But I do want to buy a little bit every bit now and then on Main Street Capital, another monthly dividend income producing stock. And so I'm sticking to my normal strategy, but I'm always looking for undervalue opportunities out there to continue to add to the investment portfolio, to continue to add to that passive income total. So I'm not stopping, despite if the market's up 5%, 10%, 15% in a month, in 45 days, I'm not stopping putting my money to work. I'm not going to dog on, the Treasury investors out there, but at some point you have to rethink that strategy, because by the time the rug gets pulled from you, which it probably already has started, thanks to Papa Powell pausing interest rates again, and the whole world thinking that there's an interest rate cut in March of 2024, Treasury yields have plummeted. So your 5% yields are not there anymore. Your 4% yields are probably barely there right now. So by the time you want to exit that, the stock market is going to be way, way ahead of where you could have been. For instance, up 15% in the last 45 days. And I can guarantee your treasuries have not returned 15% in 45 days. But hey, it's a great risk-free fixed income strategy. So congrats to those that were just generating income off of that. Because that, to me, is what it's all about, is passive income to get to financial freedom. So to recap, I've been sticking to my strategy, but we're now at this peak. We're at 52-week highs, not all-time highs, but 52-week highs in the S&P 500, over 4,700, again in the S&P 500, returning over 23% this year. So what is Lanny doing? What could you be doing is the question. Well, we'll really go down memory lane, guys. In fact, since 1926, the S&P 500 has returned over 20% 35 times. 35 times the S&P 500 has crossed 20%. Now the question is what did it do the year after? Because guys, we're sitting there. We'll probably finish up over 20% with only 2 weeks left in the stock market in 2023. So what typically has happened the year after? Well, I'm going to show you here on the screen just what the S&P 500 did following a year of 20% gains. Again, 35 different times it's happened. And you can see here, in summary, the S&P 500 has again returned positive in about 23 out of 35 times. Let's call it 66% of the time you'll have another positive year following a year of 20% gains. So 2 out of every 3 years, or 2 out of every 3 times, the S&P 500 will continue to chum along. Because you always might be thinking, okay, well, if we're near or at all-time highs, if we just performed over 20%, it's going to drop then no matter what. History says, no. History says, hey, 66% of the time we're still returning positive in the S&P 500 the year after. Again, about 34 to 35% of the time, 12 out of 35 times, it did return negatively. And I think the most recent example, as you'll see on the screen, guys, was 2021 returned over 20%. 2022 was a down year. So that just happened, right? But that was followed by 2019 positive years, 2020 positive years, 2021 positive years. So keep that in mind. You had 3 positive years of returns in the S&P 500 to have what we had in 2022, only for the S&P 500 again rebound by 23%, because historically to have back-to-back down years is also very rare. So that is why what I plan on doing is continuing my investment strategy. No shock there. Yes, you can let the grip down on your seat. You You don't have to chug the third, fourth beer after, watching this video, guys, or you can if you want. But I plan on staying invested and keep investing. That's my goal. I'm still going to stick to the Vanguard ETF trifecta because more than likely there could be a positive return after this year. I'm not here to predict that, but there's a better chance based on history that the S&P 500 returns positively. Again, 66% of the time, the year after a 20% return year, it goes up still. And not only that, but since I'm a passive and income investor, guys, VYM, Vanguard's High Dividend Yield ETF, for example, Q4 dividend announced 12.8% higher than last year's Q4 dividend of 2022. So I'm going to continue to buy these shares because my yield's staying pretty strong. The dividend growth rates are staying fairly steady even in this weird economy we're in. What I'm trying to say is I can't predict it, and all I can see is positive news. If you zoom out on the S&P 500, the trend is up. Again, 66% of the time, the S&P 500 is up. So I'm not changing my Vanguard ETF investing strategy. I'm going to keep investing every single day with VOO and VIG every single week with VYM. I'm still going to look for undervalued stocks. I still like Shell at current prices. Again, stubbornly, I like it below 64. Kroger, we'll see what happens with this Albertsons deal. Pepsi even yields, PEP yields over 3% right now in the stock market with above average dividend growth rate for that dividend king. And I've held Pfizer for so long, and they've had a dog year down almost 50% this year, but they did just announce a small dividend increase of over 2%. So the question is will Pfizer, if you're in it for the long haul, rebound starting in 2024 or 2025 and beyond? These are some of the stocks that are on my eyes, on my watch list. So I'm going to stay invested, keep investing. Again, time in the market beats time in the market. So that's something that you could take back, think about history, think about results. Again, not saying that it's going to repeat, but there is a higher likelihood of that happening, just like we saw in 2023 after what happened in 2022. Let me know what you guys plan on doing with investing. Let me know in the comments if you liked the video. Oh yeah, subscribe to my channel, guys. Like the video if you did happen to get something out of it. Appreciate your feedback. Let me know what else you'd like me to hit on, record. Again, just wanted to have a conversation with you guys and let you know what I'll be doing going forward, guys. So thanks for rocking with me. This was Laney from Freedom Finance. Catch you on the next one.